Without further ado, I'm going to turn it over and introduce Rob. And Rob, to start with, can you just give us for a lot of new people on the call, can you just give people a quick intro about yourself? And
I'm Robert. There's my email, by the way, again on the slide. I've been updating some of my old seminars, and I thought after last month, Carl did such a great job on exits. I thought I would come around and do entries, and add on to some of the. I don't know that I call it training or anything. A lot of us don't need training, some do. But I thought it would be an interesting topic, and I do it for myself too, because I like to review. I get away from basics, and it's always good, I think, to take a look back and see where you came from. I want to encourage questions if you have them. I'm going to go over a lot of information. And I encourage questions as long as we have time. 9:30 is generally the stop time, and I think I'll make it to that, but I'm not actually. I never know how long this will go. But don't think you can't ask something if you want to, because that's what makes it all kind of worth it to me. Anyway, this is just a little disclaimer here. I'm not giving any trading advice, although sometimes it'll sound like it. It's not. And the other thing. What was the other thing? I had another thing. Oh well. Anyway, I'm assuming a reasonable knowledge of how to read a candlestick on a chart, and support and resistance, and be able to recognize a trend. I'll go over that a little bit if need be. I think I have one slide on support and resistance, but even if you're unfamiliar with those concepts, and I don't think anyone is, this should still make some good sense. Oh, the other thing was, sometimes, I mean, I've been doing this a while, and I've done it professionally since, well, I started in 2004, but I didn't really make any money until 2007, 8. But I sometimes make it sound really easy, and that's a fault of mine, because this is not easy. I mean, after you do it for 5 years, it gets easy. But so if you are newer, and I think a couple of you might be, don't think just because I'm saying this is all you have to do that it's easy to do that. I mean, you have to work through everything yourself. You really do in trading. It's like every little detail. There's a big difference between knowing something and being able to follow it, and actually doing it or owning it yourself. And that couldn't be more true with trading. Anyway, I've been the organizer of this group for I don't know, 7, 8, 9 years. There were 3 before me. I think the group started 2006. I've been attending this group since 2007. I'm hoping Ethan's going to be the next organizer sometime. So I've traded my own personal account. I've worked for trading education companies. A lot of the information I'm going to share tonight, I mean, has been sold in the past in these courses, which are, not necessarily bad. They're just expensive oftentimes. But, as long as it's got a credible instructor, they're usually pretty good. I trade equities exclusively. I've never done it. Well, I've done one option once, And the stock fell $4 and I couldn't make any money because I messed up the option. So I don't do them. I just do equities. I also play the gaps, which I'm not going to talk about tonight, but in a future seminar I can, how I sort them out. But I like to play shock and momentum, and I only get that in equities because they close overnight. So there can be an imbalance in the morning. Stuff like futures, you can get pops, but because they're open all the time, you don't have that pent up supply and demand, which is what I really thrive on. I also moderate my own little trading room. I do it in conjunction with a guy who's actually a member of this group and started a company called Major League Stocks because he administrates everything for me. But I don't charge anybody to be in there if they're friends of mine anyway. Eric may charge some people, but I don't. So if what I talk about makes sense and you want to participate, feel free to send me an email and I'll get you a link to get in. But it's not a beginner's room. It's not necessarily for education. I make a lot of assumptions, and I do it because I like trading with other like-minded professionals, and we share a lot of ideas of trade. So it's good for newer people, but I wouldn't take it as education. Most new people get lost. So for whatever that's worth, if stuff I say sounds like, yeah, I do that, then feel free to send me a link and check it out. Like I say, I don't charge anything for it. All right, so let's talk about entries. It really is a trader's job to enter. I mean, if you're not in something, you're not really a participant. And there's just, hold on, I'm gonna hide something. Okay, I'm hiding the Zoom so I can see my slide. So there's just tons and tons of barriers to entry, and hopefully what I'm going to clear up tonight is getting around some of those barriers to entry and make some sense out of it. I'm at least going to tell you what I do. Is that a question or just a noise?
I think it was just a noise. One thing, we have a message that was sent. Can you try and make it full screen, Rob?
As long as I can keep my notes, yes. Except the Zoom thing blocks my menu bar. Hold on. How do we even go full screen? Well, that doesn't help. I thought there was a button somewhere.
I think in the top right-hand corner, next to the X.
Is that gonna do it? Well, see if it the
Zoe, hey Zoe, are you on? Do you know how to make it full screen?
I think it's my toggle is blocked
Oh,
by
Yeah,
the
you could click
Zoom bar.
slideshow. You could click slideshow, but I think you might lose your notes at the bottom.
Yeah, I really would like to keep my notes. Here, let me just make it as big as I can. I'll try it at this size and see what happens. I don't even see the slideshow anymore. All right. Oh, I could maybe hide the toolbar. Sorry, I haven't used
it looks fine. It looks
Wow.
fine.
It looks fine. Okay, I'm gonna go with that. All right, so I just wanted to give a couple of definitions here in the beginning. According to some online dictionary, entry is the act or an instance of entering. Plain and simple. And I wanted to differentiate entry from strategy. I'm going to talk about strategy, not directly, but it's going to come up a lot because an entry is part of a strategy, but it isn't a strategy itself. I mean, you can have an entry strategy, but it's just that. A strategy is a complete plan, a method, series of maneuvers to obtain a goal, and that is different than an entry. What I'm basically focused here tonight is on one element of a strategy. So I'll build on that a little as we go, but I want to make that distinction because it's something that took me a year to even understand when I started that there's a difference between a strategy and an entry. So with that said, I just want to take a little pulse question here. Get a little feedback if I can, or not. It's okay. If you had a choice, between a great strategy and a mediocre entry, or a mediocre strategy with a great entry, would you pick one over the other? It's not a trick question. There's no great real answer to this, but I have a real opinion about it. And I was wondering if anybody else does, if you think like this. Any insight in that? What you might pick if you had to pick one or the other to trade with? Would it be strategy or would it be entry?
For me, hands down, it would be entry.
Yeah, me too. Me too. It's like you can have all the, well, I mean, like I say, I think you need both, but you can know everything and have the best strategy in the world, but if you can't execute entries, it's really hard. Where if you don't know anything, but you take perfect entries, I wouldn't recommend doing it that way, but you could probably make money with perfect entries, even if you don't have a strategy at all. But again, I'm not recommending that. That's not the way to do it. But I think entries are maybe the most important part of trading. To me, they are. It's what makes money for me is the entry. And I'm kind of an entry brat. I'm a stickler for the right entry. And so sometimes I miss the trade over it, but when I get the trade, they're right. So I like to be an entry brat. Okay, here's a concept that I wanted to go over. And most of us know this, I think, but we have a lot of choices when we trade. New people get overwhelmed so easily and quickly because there's just so much. And it's like, I used to think I needed to know everything. I needed to watch 3 TV channels simultaneously, read 27 newsletters, read 55 books, and blah, blah, blah. And that's not necessarily bad, but it doesn't really help me trade. It's like figuring out what I wanted to do is what helped me trade. But the point here is once we enter a trade, we have all these choices staring at us. What kind of software are we going to use, or what are we going to trade? But once we enter, we can control one thing and only one thing. Anybody got the one thing we can control? when we get out. That's the only thing we have control of once we're in the trade.
I was gonna say
I-
when you sell.
I
Yeah.
unmuted, wasn't fast enough. I was gonna say that.
Yeah, it's obvious, when you look at it, it really is. But it seems like there's so much you can do. And the point is, all the research and all the work is in the entry. Once you're in, you can't really do anything. You can sit back or not. As I said before, entries are one component of an overall trading strategy. And this is just my rules here. I mean, I'm just one trader. I've been doing it for a while, and for what I do, I know what I'm doing. But I'm not saying it has to be like this. But these are the 4 things that I personally have to have before I enter a trade. And if I don't have these 4 things, I can't do it. There's no trade for me. And there's some other things I don't have on the list because I need a strategy. Also, I'm not talking about strategy here. I'm assuming I have the strategy. I have the stock picker that I want to trade. And then once I have all that, I need to know exactly where I enter. I'm going to go through these 4 points in a little bit of detail. I have a slide on each one. So I want to know exactly where I enter. I want to know, before I can do that though, I have to know where am I going to exit for the loss, because, sometimes we lose. This is one I find a lot of people ask me about this because they don't do this, but I want to know where I'm going to exit for profit before I get in. It's part of my entry. And then I want to know, how am I going to get the trade to that exit? And that's basically management. And I would say that not everyone needs to know that. That could be something you leave off. But I have multiple management strategies. Like if I'm doing a quick scalp, I don't want it to go against me at all. So I'm going to keep upping the trail until I get out. But I take a lot of trades where I just want to get in at the open. It's my perfect strategy. And I don't want to get knocked out. So I give it a lot of room. And then as it produces, I want to trail it more. But I don't want to intermix my strategies. So before I get in the trade, I have to identify how I'm gonna get there. By the way, I have a whole seminar on managing. So this is not that. This is entries. But
Hey, Rob, real quick, you said we can ask questions. So I'm just
Yeah,
trying
sure.
to moderate here for the new people who are beginning trading. Can you just give a 1 or 2 sentence explanation of what you mean by trailing the trade? Because they won't know what you mean.
I would like to delay that till I look at some real charts. But yeah, I'll answer that in a while. But bring it up if I forget. It'll be a lot easier to demonstrate that when we're looking at a chart. And I wanted to go through these 4 points here as well. Okay, so number 1, the exact number. This is what I touched on earlier because Carl mentioned that he likes to do the videos or do the thing because it helps him. When I enter a trade, I always identify the trade before I get in. I think that's good practice rather than just saying, "Oh, that looks good, I'll get in." And my stuff, it's basically a statement. I'm always, if the price trades over for a long or under for a short of the specific number, and I'll explain later how I determine what that number is. But that'll be my entry point. And I have to have an entry point or there's no trade. even if it looks great. I mean, I have to have an entry. And that's determined by the bars on the chart, which again, I'll get into in a while. And okay, so I made my point. The trade needs to trigger. It actually has to hit the trigger. And the good thing about it is once I identify the entry, I don't have to look for it anymore, unless I'm looking for another one, which I often do. But I have to do all this work and all this scanning of the charts I'm looking at to find the entry. But once I find the entry, I can just plug it in. I usually put in a buy stop or a sell stop sell to initiate a short or a long. And then if it happens, it just happens. The only thing I have to watch out for then is make sure my entry criteria doesn't evaporate. In other words, the trade is still valid when it triggers, because there's criteria to that entry. So the trigger remains valid, pretty much until I take it off. And unless it's a really spready stock, if it's a big spread, then I can't just put it in my system. I have to watch it. And if it's too big a spread, I just don't take the trade. I can't trade that stock. Anyway, number 2, the exit for loss. This is the new trader's worst enemy. Someone, I think it was Dallas, mentioned earlier, blew out an account. I mean, this not assigning stops based on risk is the big hurt with I think newer traders and some experienced traders. Sometimes you just don't believe it's happening to you. Just keep the thing on. And the stop, to me, the exit for loss, doesn't have to be an exact number. It could be an area. It could be based on a lot of different things. But for me, I always have to know the exact dollar amount. Whether it's a chart stop or not is different. But I don't like to lose a lot of money on a trade. Like personally, I $200. By the way, I day trade. I'm pretty aggressive at day trading. Now, for longer term trades, this number's different. Like I actually risk more on longer term trades. But for day trading, I don't want to take a loss of any more than $200, and really $100 is the most I want to take in a loss. So I trade around low dollar amounts, and I'll show you throughout this how I try to maximize those numbers. But it doesn't matter what your number is. I mean, a stop shouldn't hurt, but you should flinch. It shouldn't be not enough that you don't care, but it shouldn't be too much that 1 or 2 or even 3 or 4 is really going to hurt you. So everybody differs in what that number should be. And all I'm saying is I've got to have one before I get in a trade.
Can I make a comment on that point? Going back to how much loss. Yesterday, I got into a trade long and I did 2 contracts, and it didn't take me too long before I went, oops. After I entered the trade, then I recognized what it was doing and what the pattern was. It's a pattern that does repeat every 3 or 4 months. And I got into a loss that, I like to have it stay no more than $200, kind of like your number. But this thing went down. I was well over $600 at a loss, but I was 95% confident it was going to come back. So I stuck with it, and it did come back. I was right that I did recognize the pattern. It came back up and it made a big move for a nice profit. So I may have a number in my head, say $200, but if I know the pattern, if I'm confident, have a high confidence that it's what it's doing, then I may just stick with it through the loss and have it come back. You're playing with fire when you do that, but you can do it if you have high confidence, you know what the price action is ultimately going to be.
Yeah, I know some people, I've known traders who don't even have stops and just get in. I have to readjust something. And yeah, you're right. You can do that. I don't. I mean, I'd rather get out and then get back in as a new trade. Take my stop and then take a new trade, rather than, you know, when it sets up again. But yes, I mean, I just a little note on that, and I'll say this. I don't want to encourage this for a second, but I think for most of the time, taking stops, you actually make less money. I think, you know, if you're trading good patterns, staying in makes you more money, because oftentimes the thing stops and excuse me, and then goes on to work. But it's kind of like your home insurance. It's like you pay $1,500 or whatever it is for it. Did you use it? Probably not. Did you use it the year before? Probably not. It's just one of those things, when you need it, it saves you big time. You know, like if you have a fire or something. And I look at stops like that. So that's my thinking anyway. So I will take it and then just take a new trade. But I agree, Carl. I mean, if you know what you're doing, you can get around that. Here's one that not everybody thinks about. I meet people all the time, or did when I taught this regularly. Where are you going to get out for profit? And so many might just get in and see how it goes. I don't ever do that. I want to have a good idea of where I'm getting out for profit. And that generally, if I'm long, is the next supply area or resistance area, as some call it on the chart, on the next higher time frame that I'm trading. And I actually usually have multiple target areas, but I need to pick one because I need to assign a risk reward to the trade, and I have a minimum risk reward that I'm going to look for. And depending on my success ratio with any particular trade, you know, I might take a trade if I think I can make a huge profit. I'm apt to be more risky on it. Like I don't mind taking a trade that stops out 3 out of 4 times if I'm going to 10 times my money on it. But if I've got a 55% chance of it being successful, I obviously can't take a trade that is only going to work a third of the time. And I'll talk a little bit about knowing those numbers in a little bit too. But it's the only way to answer the how much question or the size question is to know where I'm getting out for profit. And then the last of my 4 points here is, and this is the management plan. You know, the worst thing I can do, and I do this still to this day, is put a trail stop in there that hits for a small loss or a break even, while the original trade doesn't stop and ends up going to a big target. You know, that's a killer for, well, it was a big killer for me. I'm a little better at it now, but it still happens. So I have multiple approaches to trailing, which I will mention on the chart how to do that, and at least one way to do it. But so I don't want to get confused. If I'm getting in on a 1-bar scalp trade, I don't want to use that management plan on a trade that I'm going to keep till lunchtime or later, or particularly on a swing or a core trade. Oh, and I should mention, I'm going to talk about this in the context of day trading, my entries, but they really do work on any time frame. I mean, it gets a little more volatile sometimes, but the bars that I'm going to show and the entries that I'm going to show, they work on daily charts, weekly charts, monthly charts, 2-minute charts. They really do. I mean, patterns are patterns, and they develop, and they're similar on different time frames. So if you only longer term trade and think that this may not be relevant, I would say it's very relevant. Risk. There's no trading without risk. Everybody knows this, right? This is probably the most important slide in this whole presentation, by the way, but it's also the most boring slide because it involves numbers and having to track stuff and all of that. So a lot of people just won't do it, but I believe there's until you get good anyway. Once you're good, once you can trade profitably, consistently, then you can lax on this if you want. It's still good to have these numbers. Like I think corporations always know their numbers, right? I mean, Volkswagen knows how many cars they're going to sell next month, give or take a few. They've got it all, they know. And a trader can know what your expectancy is, you know, how much you need to risk to produce a certain amount of income. And the longer you do it, the longer you track, the better your numbers are, the more they are likely to continue. So there's 2 numbers I just want to point out. I'm not going to go into a long thing about it, but I call it batting average. Some call it win ratio. The formula is you take your positive trades, not your losses, but the trades you made money on, and you divide that by your total trades. That's your win ratio, or your bat. It's just like like a baseball player's batting average. Take the hits, divide it by the at-bats, and you get your average. This is an important number, but it really doesn't mean much unless you couple it with another number, which I call the risk to reward ratio. It can be called a lot of different things, but it's your average gain divided by your average loss. So if you do 40 trades, it doesn't matter how many of them were wins or losses, but you take your wins and you average them. How much? Get the average, divide it by the average loss, and you'll get a number that's hopefully greater than 1. Because if it's not better than 1, it's a problem. You're doing something wrong. And if you can get it to 2, you're pretty good. So and some get it to 3. But it's a big deal number, and the 2 numbers together tell you what's going on. For instance, anybody can have a great batting average. I can tell you how. You can buy Intel with a $5 stop and a 5-cent target. You'll have a 98% win ratio, right? Almost every trade will be a winner. You won't make any money, but you'll have a high average. That's how some of these subscription companies say, we have 95% winners. You know, they never get out. And you just, so you need both numbers is what I'm saying. And then with the 2 numbers together, you got something. Like it's quite possible to be a winning trader with a 35% batting average. You just need huge gains to offset all the losses. I'm about 55% personally. So I'm just barely better than break even, but my gains are a lot higher than my losses. And that's where the money is to me. It's also helpful, but not necessary to know what your expectancy is. And expectancy is just the reward to risk ratio times the batting average, and then minus the loss ratio. And the loss ratio is, as you can imagine, it's just 100 minus your batting average. So that formula will get you its expectancy, which is helpful. But again, I don't think one needs to know it exactly. I rarely calculate that, but I do calculate my other 2 numbers. And when they're off, I know there's something wrong. That's the time to dig in and look deeper at what I'm doing. And I just want to do one quick slide on risk. Risk is important. Identifying it's important. You can't run away from it. You have to decide how much it is. Like I say, with me, it's basically a couple $100 on a trade is the most I ever want to lose. I could do more. I mean, it's just a matter of what your numbers say you need to have to make what you want to make in dollars. So let's just say it's $100. That's the maximum loss. I call that a risk unit or an R unit. The assumption is the loss is always capped at 1. The most you can lose is 1. Now I know there's slippage, and if you're overnight, you can have gaps against you. But basically, it's 1. So if you have a $200 gain, that's a 2R trade. And I'll come back to that later when I look at charts, because I really don't want to take a trade that doesn't have at least a 2 risk unit possibility. And I prefer 3 or 4. But the absolute minimum trade I want to take as a possibility of 2R to that target that I was talking about, to the exit for profit. Anyway. This is important stuff. It just gets glazed over all the time, which is why I try to make a point of it. This is a graphical readout of that. I haven't been doing this. A few years ago, there was a guy I traded with who was plugging all this in. This is my trading room on 1 week a couple of years ago. But the blue line, and the totals are the first bars, and then the next 5 groups of bars was Monday through Friday of that week. But it's just a graphical read of the batting average in the room that week was, right around 55% or so, which is where mine usually is, and the risk reward was just over 1.5. It's a little low, but and the expectancy you can see is the gold, about 30%. So what that tells me is if those are the numbers, that for every dollar you risk, you should realize 30 cents a game. If you want more money, just risk more, and stay away from big losses. All right, so with all that, these are the entries that I use. Basically, there's 7 of them, and there are more entries. I mean, these are entries that I use by design. And here's how they work. I can probably make them bigger. So they're all bull. These are all the bullish entries anyway. I use the same exact entries as shorts, and a little more often, but I'm not going to bore you with the same thing duplicated. These 2 bullish entries, the first 2, the ones that are sectioned off in the top left, these are very aggressive entries. They're 1-bar entries. They don't have a prior pattern. I only use these entries when I have a perfect strategy and I absolutely positively want to be in that play. Otherwise, I stay away from these entries. Has to be perfect. And the one on the left, the one with the red bar first, that's a better entry. I almost never do the 1 bar in the same direction. Much better, like if my stock opens and it's a long, if I'm looking at it higher, my strategy says higher. I would much rather have it go red for the first bar or 2 and then overcome that than I would just jump in. So here's what I do. The top of that first red bar, that's the entry point. A penny over if it's liquid. If it's not liquid, you got to use a little more. By liquid, I mean it trades with a penny or 2 penny spread. If it's got a 5 cent to 10 cent spread, I give it a little more room to trigger. And if it's a 20, 25 cent spread, I probably won't trade it. my general, what's that?
Rob, real quick, based on all the stuff I've learned from Angel, so are these candles representing a day or 15 minutes or a minute or a month or?
Well, they could be any time frame. For me, these are usually 1-minute candles at the beginning of the day on a big shock gap that I want to be in. But it doesn't matter. I mean, this could be if you see a daily red bar, I mean, on a daily chart, there's no reason to play a 2-bar pattern. So I probably wouldn't use these first 2 entries. The other entries, though, on this page, sure, you could use on a daily chart, weekly chart. The reason that these are just 2-bar entries is because I play gaps, and the overnight gap is usually distorts the daily chart. That's the good part about it. The bad part about it is there's no prior pattern other than the pre-market. So you have to make decisions sometimes based on 1 bar. Anyway, I like the first one if it's a perfect trade. The second one only if I have to be in at any expense. And the entry, by the way, whatever the price is over the red bar with the stop under either the red or the green, whatever is lower. And when I say under, it, if it's a 5 cent bar, then it's a penny under. It's right there. If it's a 60 cent bar, I give it a little more room. I'll give it a dime extra or so. I don't want it to affect the risk reward that much. But depending on the spread, what stock it is, I will go a little under the bar. So those are the two highly aggressive entries. Then there's the pullback entry. That one's right below. And this entry, I mean, this is a big time entry. If I were to pick one entry that I was going to use and only going to use one entry, this would be it. It's a pattern that it's very popular because it works. And I think the biggest mistake I see other traders make with it is I can only buy this if this stock is in an overall uptrend, if it's bullish. If this stock is not bullish on a higher time frame, this is not an entry to me. But as long as it's bullish, particularly if it pulls back to a a short time frame moving average like a 20 MA, I love to have a VWAP right there too, volume weighted moving average. But then I go right over that bar, under whichever is lower of the red or the green bar. So that sounds easy, but these really work. Pullback entry. And then the failed sell setup. See, this is in an uptrend, so I'm looking at the one bar as a sell setup that fails. In other words, if I were looking at this as a short, that's a great entry. That's a pullback entry short, right? If I were looking at it short based on my strategy. But I'm looking at it as a long. So I don't buy over the green bar. I can't buy over the next green bar. I just have to wait. Even if I really want to be in this, there's no entry for me until a red bar appears. And then once the red bar gets overcome, I can enter. I have an entry. I can go over the green bar with the stop either under the red bar or under the first green bar. Now, how do I choose? I'm kind of arbitrary on that. If I have a really big target, I use the bottom bar, and if I don't want to get kicked out of the trade. But if it's 2-3 risk units to the target, I use the stop under the red bar. There's a little bit of magic to this. I mean, you have to work it out. But the pattern is good. You get a few green, you get a red, you overcome the red, go. It's very, very similar to this one just below. I'll try to keep them both up there. This is just when the red bar gets ignored. The difference is this one did not trigger a sell setup, right? We didn't trade under a prior green bar's low. We just got a red bar, but it's actually more bullish than the failed sell setup because it never triggered a short. It just all strength, it just pulled back a little. If we go into a smaller time frame, it's a pullback entry, right? You're only seeing one red bar, but this is a 5-minute chart. The 1-minute chart would look like the pullback. So I like this entry.
So Rob, quick question on that last one for all of us really. At exactly what point would you go in when it on the third green bar, when it just gets over the top of the red? At that point you would pull the trigger, or when exactly?
Yes, over the red bar.
I see.
Over that bar. And the stop would be under the green bar for me, or under the low of the day. I want to pick the, I don't want a breakdown occurring against me. So I don't use the red bar. Now, if the red bar is lower, I use the red bar, but then it's a failed sell setup. So I use the green bar next to the red bar as my stop.
Huh.
I'm not sure it matters much. I've never tracked it for.
And you're talking about the body of the bar.
Yeah, well, and the tail if it's got a tail. Yeah, you got to include the tail on that.
Okay, okay, include the tail.
Yep. And if you've got the room, I mean, if you've got the risk reward, you could use the bottom of that bar. But yeah, it's hard to not want to make twice the profit. So I usually don't do that. And then continuation, this is a popular pattern. The difference here is it has a big bar. And this big bar cannot come after a bunch of other green bars. This big green bar has to be either right on the open or out of a breakout pattern. But if we get a big green bar that isn't extended up, that isn't, you know, the problem with this is if it's the third or fourth bar, it's probably not going to continue higher. But if it's the first bar, then we get a little red bar. When the red bar is overcome, it's continuation. Ooh. That's called continuation, and the stop can be under the red bar with the entry over the red bar. Some call this a 1, 2, 3 pattern. And you could have a couple of bars in here. You know, there could be a red bar, green bar, and then another red bar. But if you get too many of them, then it becomes the breakout, like the next one over on the right. Now, breakouts don't have to come from big green bars, and continuation patterns do. But it's a subtle difference there. So continuation, breakout is, you know, widely recognized as an entry pattern. I use them all the time. Stock goes in my direction a little bit, bases. I want to be in the next move up. So you have to be careful with these too. You don't want to buy too many bars up, but a little consolidation after a modest move leaves room for more move to the upside. And I like to stop it under the base or at the low of the day, or, you know, whatever time frame you're playing. Breakouts fail a lot. They're not the most reliable pattern, but I'll use them if I want in the trade. This one here, the reversal bar, is a very powerful pattern. You can almost play that as a 2-bar pattern on just about anything. If you see the big, huge red bar and then an immediate green bar that overtakes it, that is generally going higher. Now, what's the problem with it? There's one problem with this kind of pattern. Anybody know? It's hard to get risk reward because it's such a big bar. It's a big stop. You know, you've got to have a move that's twice that big to get 2 risk units, which is why I like to play them in conjunction with continuation. You know, if you get the big red bar and the way I've drawn it, then you get the green bar. I know that's going up. That's almost a strategy.
Sorry.
It is a strategy.
I gotta sign off now, sorry.
Oh, okay.
Bye.
Ma'am. And then you can see this is a reversal bar with continuation, because then you get the little green bar and then the green bar is the buy, and I can stop the red bar instead of way at the bottom. And then the last one is the topping tail reversal. This one goes up, and then at a point in time, this topping tail is a huge green bar. And then it basically gives it all back. So in a way, it's a reversal bar. But then once we overcome the topping tail, there's confidence that's going higher again. So, and there's one other entry that I didn't draw that I really don't play anymore. But, you know, in conjunction with the breakout, I know people that play shakeouts. I really don't anymore because they're volatile. They're highly profitable when they work. But, you know, you could get this base and then you get one bar that pops down and immediately reverses. That usually doesn't hurt the breakout pattern, and you could actually buy the bottom of the base. So I just throw that out there. If you're working through your own entries and you want to do shakeouts, it's a valid entry. Any questions on that? There's a lot of information on this page, and these are not the only entries. These are the only ones I use. I would recommend anybody that is trading to make your own entries. Decide, you know, what is the pattern you're going to play. And always,
Robert,
yeah.
what was the one in the lower left-hand corner called?
The pullback.
Okay, that pullback, when you look at it, invariably that creates a V pattern, and inevitably it'll go back up to where it started, and hopefully beyond. So if your target price, you can set a target higher than that top red bar. But what you're not showing here when I trade momentum is you're not showing volume. If that green bar on that pullback has, like if it was the biggest volume spike of the day, that baby is gonna just jettison.
Yeah, you just made two great points. Well, one is the volume. I don't really watch volume because I trade stocks that are in play. I play the earnings and the big news. So pretty much everything I play is doing volume on that day. I'm usually doing the stock that's doing 10 times its average volume. So I just don't worry about it, but Bill's making a great point that when you get a reversal with volume, it's usually going. And the other point was it generally goes higher. Remember I mentioned when I first started, I only play these if the stock's in the uptrend. I never played this pattern. Well, if the stock's in a downtrend, it's unlikely I'm going to buy it. I'm talking about a higher time frame. So this is a 5-minute chart. If the daily chart's in a downtrend, this is no good. It's only good to me if the overall stock is in an uptrend, and trends tend to continue, and therefore the target is often higher than the top because we're expecting a new high in trend. Really great points. Thanks, Phil. All right, any other questions on this one? All right, I'm not looking for this. You know, if we get a big, huge bar down, I'm not anticipating it climbing back. That's usually dead to me when that happens, if I'm looking at it long. Some people will play that, but you know, just depends on your strategy, but I don't. This one is my worst nightmare when I want to be in something, this next one. Because this is the one I can't get in. You know, I want to be in, but I don't have a way to get in. It's just green bar after green bar after green bar. Meanwhile, I'm missing the trade. Hate that. But I can't do anything. I don't, if I don't have an entry personally, I can't get in. And then this one, you know, you get the big, huge green bar, wowee, but is there anything left? Sometimes there is, but again, unless I get a cute continuation pattern, I can't play a big green bar like that. I can play a pullback after a big green bar, but I just can't play the next up bar. And then this is the pullback in a downtrend. You know, this is not an entry. This is actually a short right here, if I'm looking at it as a short. And same thing here, just because it pulls back, if it doesn't trigger, I'm not in. I have to overtake a red bar before I'm going to get in some time frame.
So those tails are important, especially when they're long. Like that short entry point for you on the fourth diagram.
Right.
If that tail was bigger than the actual red component, that's highly significant for it screaming down.
Yeah, that's another good point. Yeah. Like I say, if this were a short watch, I'd be playing that. But if it's a long watch, I'm never playing this. This is not what I'm looking for. All right, I wanted to just make a note about time frame. This is a big deal. I watch multiple time frames, and these patterns look different in different time frames. Like what I'm drawing here is an hourly continuation. You can see we start out, we get a nice big bar, we get a little pullback, and then we click higher. But if we zoom into that just in the square, looks like a breakout, right? I love it when I'm looking for something long and the hourly pattern is continuation and the 15-minute is the buy setup and the 5 minutes a breakout. I'm all over that. That's what I want. I want to see confirming entries in other time frames. Now, at the very beginning of the day, I can't really get that. But later in the day, if multiple time frames all are showing me entries in the same direction, the thing to watch out for is if I'm seeing a pullback in one time frame, but shorts in other time frames. That's a problem. It's really nice to get at least 2 confirming time frames for me, and 3 is just the best. But the patterns look different, so that's why I bring it up. It's
Rob,
tricky.
could you repeat that first sentence about the different patterns in the 3 time frames?
Well, if we've got an hourly, a 15-minute, and a 5-minute that are all saying higher, I mean, I know the daily's saying higher, I wouldn't be looking at it. So if the hourly 5, 15, or the 1, the 5, and the 15 all have bullish entry patterns, that's great. Want to see that. Love to see multiple time frames saying essentially the same thing, but in a different way. It's rare you'll get all 3 of the same pattern. Like, you're not going to see pullbacks in 3 time frames. But you could see a pullback in one, continuation in another. It's just more confirmation that your trade is likely going to work. At least for me, it is. So if I'm looking at a short time frame chart and I know the daily's bullish, I'd like the 15 to be bullish too. And not in the middle of a pullback. You know, because a 5-minute continuation isn't likely to work if the hourly is showing a pullback and we're in the second bar of the pullback. See you, John. Thanks for coming. All right, I'm gonna try and speed along. I got a lot more stuff, but we're getting a little short on time. I was saying that I'm assuming a knowledge of support and resistance, but I have this one slide of it that I just wanted to go over. To me, major support is a retouch or a point at which prices bounced off of more than once. You know, one bounce is one bounce, that's a low. Two bounces, that's support. Same thing with resistance. If you have a double top, there's resistance up there. If you're in an uptrend and you expect it to go higher until it doesn't. So if it doesn't, I don't necessarily want to play back into that because I know there's resistance there. But there's another kind of support and resistance, and I call it minor. And it's actually more powerful. Minor support to me is the retouch of a prior high in trend. So I can only have minor support in an uptrend. So by definition, to me, that's better. We're returning to the prior high. And that's a great point, particularly if you put a 20-period moving average there and room on a higher time frame to go even higher and maybe a VWAP there. Love those entries at a prior high because it has to be in trend. Support, major support doesn't have to be in trend. It is where it is. So I wanted to make this distinction before we look at some charts. If you're not familiar with this concept, it may take a while to sink in. But there's a difference between minor and major support, and it's kind of a big deal. All right, I don't know what this trade is. I captured this slide probably a few years ago, but it doesn't really matter. This is a 1-minute chart of a bullish stock that I captured. And see the entries? There's the 1 bar high. Well, it's 2 bars because we had a small bar. I'm gonna make this clear. But this is an entry to me. Over that topping tail, over that first bar, that's a bullish entry. Even this is an entry right there over the topping tail. See, it occurs on this 7th or 8th bar right there. These are the entries I'm talking about in a chart format. Face sideways, there's the breakout. You could call this one a pullback, but it's only a couple of bars, and I usually don't play that unless this 20 MA is caught up and supporting the price like right here. This is a beautiful picture perfect pullback to me. See right here about 950. We've got the bullish. I mean, I'm assuming the bullish daily because it's my strategy. I wouldn't be looking at this if not. And then we've now established an intraday uptrend. See? 1, 2, 3 new highs, 1, 2 higher lows, and the pullback right here just makes for a picture perfect entry at a rising 20 MA at minor support, right? We're at the prior highs of the prior consolidation. So this is as good as it gets to me right there. Although I'm sure whatever this is, I was in early. But if you want to add, which I'll talk about at the very end, and increase your size, this is a perfect place to do it. That is like entry deluxe to me. And then you get another continuation right here. Yet another pullback. This one's getting a little long in the tooth for me, but it is a valid pullback. It does work.
Rob, real quick,
Yeah.
exactly, just for all of us. So as you're seeing this pattern unfold, exactly where would you have entered and exactly where would you have exited? My guess is, knowing you, you wouldn't have waited till like 10:20 to exit. You would have exited before that, before the high.
Well, my exit depends on a couple of things, and my exit is going to be resistance in the chart in a prior pattern, or it could be timing. Like 10:30 is a decent exit time if you've been an uptrend for an hour. I'm sure if I'm in this, I get out some up in here, you know, as soon as one of these prior bars breaks. But this also, you know, this is not a problem to hold some through a pullback like this. So as long as I'm out some profit, this is, remember, a 1 minute chart. By the time 10 o'clock comes, I'm on a 2 or a 5 minute. So I'm only really on this chart to about this time. To this, I don't know how to mark it, but you know, just after 10 o'clock. But the numbers are just bracket that first bar, use the bottom of the tail as the stop, and I go in over the first bar topping tail. That's the 1 minute. It's sort of that 2 bar entry, except it's a third bar.
I see.
And then I'm very likely in again right here on the beautiful pullback. This really is perfect to me. That's a perfect entry. And see the little itty bitty bar you get to go in on? See, I'm in over this bar right here, that little bar with the itty bitty topping tail, and I'm stopped under that red bar. So that's a teeny entry. And man, does that produce, right? Love these. Now I want to look at the same thing. We're going to run a little late if it's okay. I mean, I could stop, but I've probably got 8 or 9 slides left. So just, I'm not sure what to do.
Why don't you save it for next month?
Well, it's hard to get to the same point as the problem. Some people will be new and won't know what I'm talking about. So I'll tell you what, I'm just going to try and go as quick as I can and press one. Hopefully you can stay a little bit. This is the same chart on the 2 minute. Same exact stock, but this is the 2 minute chart. See, it's got the 1 bar entry clear here. First bar is a little red. Enter right over it. You've also got the topping tail. And then you've got the failed sales setup right here. See, we get the topping tail, we trade under the prior bar's low, we get another red bar. But once we take out the topping tail, which means the cell setup saved, we're off again. And then you get the nice pullback. So on this particular chart, there's not quite as many entries on the 2-minute, but there's still a good number of entries. And I remember I was saying at 10:30 that pullback wasn't necessarily a problem. There it is, a nice entry, and you can see it continues on for a bit. Here's the same chart on the 5-minute chart. Now the 5-minute is the one I don't like because I can't get in, right? If I'm playing the 5-minute here, it's just up, up, up. You have the topping tail reversal, but that's 4 bars up. I'm not going to take that. So the only entry available here is the 5-minute pullback, which works fine. It's getting later in the morning. It's after 10:30, but there is a very nice 5-minute pullback with a shakeout right there. Like I say, some people will buy the shakeout, just buy the low. It's a gutsy play, but they work. I generally don't take them, but I'm already in at the pullback. I just try not to get shaken out on the shakeout. All right, I'm gonna keep going. I've got just a few more examples. I wanted to show this one. This is another. This demonstrates the problem. Remember I said the red bar first is better than the green bar first in the aggressive entry, back on the entry page. Here's what often happens. You get that first green bar, and then if you buy it, you get tripped out. This was a very bullish gapper. Again, I wouldn't have been looking at it. And notice I marked the daily minor support here. Now, I only know this because I marked it, but this was the prior daily high. In other words, the gap came up to here, and then we pulled back to the minor support. So this is a valid entry for me, this first one, but remember I said it's the most aggressive and I don't do it unless the thing is picture perfect. So I could have taken a stop here, but I don't buy the pullback because it's through the low a day, it's a big pullback, and we're not at support. So I don't buy the first pullback into the gap void unless it's on support. We try to go higher. It did suck somebody in. Somebody bought it, and then we continued lower. And then, like that wasn't enough, we did it again. These are not entries to me. The stock's now in an intraday downtrend, not entries. However, we hit support. Sometimes I'll just buy the support, one bar over, like buy this green bar here. Not much stuff, has to be perfect. But then once it recovers from support, notice the nice sweet pullback right there. The nice continuation play right here. Then we get another pullback that fails right there. And then yet another pullback, this time on the minor support, and that one works great. Minor support's a big deal. It's the perfect place to enter with one of these patterns. Same thing on the 2-minute chart. A lot of pullbacks here. All of them viable. I'm just going to breeze through. This is the 5-minute chart. I mean, this is where you don't necessarily have to trade right at the open. Just wait for the pullback to support on the 5-minute. You got a nice play. Secondary pullback worked great too. Get yet another one. These entries are all over the place if you're looking for them, but I only like to look for them on the stock I want to do. And oh, that was the 2 minute. This is the 5 minute. Sorry. All right, I got like 5 more slides. This
Rob?
is what's up? Yeah. More question? No question? Okay.
There, can you hear me now?
Yeah.
Yeah, that was that last slide. That was
Yeah.
over, if you're looking at the right side of the chart, that's over a 3-point move.
Yep. It is.
Yeah.
Get that all the time. I may have stopped at the open though, so you know you had to get one back. This is a play from last Friday. This is UAA. This is the daily chart now. I don't want to get into my strategy too much. I can do another seminar on that. I have a strategy building class, but this is UAA last Friday morning. This was, you know, up there on my watch list. This is a great play to me. It's gapping under green bars and it's very bearish. It's in a downtrend already, and then it triggers more shorts on the open. I think it had earnings. The only question was, would it get through this bar, this green bar from 4 or 5 days before? It opened up right there, but then traded down. So beautiful play. And I used that prior pivot low as the target. Do I know it's going to make it to there? No. But do I expect it to after a gap like this? Yes. I expect it to get to that 1750. So where's the entry? Here again, I have the daily chart in the bottom corner on the left. And this is the 1 minute chart at the open. First bar's red. Uh-oh, hard to get in that, right? It's the opposite of the 2 green bar chart now. It's the short of the same play, the 1 bar move. So I didn't take that. I didn't get in on the 1 bar low because the first bar was red. But then we get the green bar, second minute of the day. So now I'm in on the next break of the low. This one I used to stop at the high of day. But still, good play. Get in, stop high of day. Look at that nice sweet move down that you get right off the open. However, it wasn't yet at the target. It only made it to $18, right? Target's $17.50. So I don't get all out. I take some profit here. But then look at that. We get another nice sell setup, right? Right on a VWAP. That's the pink line there. And the 20 MA just called up too on the 1 minute. So another beautiful entry. This is a great play. I'm gonna go over dollars on this in just a second and then be done. This is the same thing on the 5 minute chart. You can see the 5 minute chart, you really didn't have that first drop entry, but you had a 5 minute sell, you know, the pullback entry, I'll call it. It's the reverse of the pullback, where you rally up to the VWAP and then you fall under the green bar. Not the biggest trade, but you get a new low. And then notice the thing couldn't rally. This is the shakeout, right? This is the attempt to rally to a new high. Okay? You go from a downtrend to a sideways trend. You have 3 or 4 topping tails. Then you break out. If this thing is going to rally, it's going to do it right now. But can't get through a VWAP. This is the shakeout, right? If you play shakeouts, that's it. It's a shakeout to the upside. It shakes out everybody who stopped over the base. right? And then can't get through the low, lower high, can't get through the low. There's the breakdown. And there's the sell setup after the breakdown, the new low, the whole thing. And look where it gets, below the 1750, not by much, but there were 3 beautiful entries on this chart. This is
Rod,
I
you
did
could
2
have,
of them.
you could have got out at the bottom of the 5th bar,
What's that?
6th bar. You could have got out at the bottom of the 6th bar. That's a 5-minute chart. So it was down there at almost 6:55. Long
Yeah.
enough.
Definitely could have got out there. I did get out there. You know, close enough.
Right.
But there were a couple more entries if you wanted to do them. I just wanted to take a minute now that I've thrown all this out here and talk about the power of multiple entries.
That's what I was going to say. If you got out, did you get back in on that trade?
Well, I didn't because, you know, I haven't been working much past 10:30 these days. But if you're trading, yeah, if you're going to trade in the lunch or after, that's what I want to detail here. If you take the play straight up, the stock opened with a bearish gap at 1907, could only trade up 3 cents to 1910 and all that in the first minute. That's why it was a short. You can see the bearish gap, the inability to rally at the open. It also produced a continuation entry. That's the one I took, 1877 by 1910. You can see it, I think yeah, it's right here. Under these topping tails with a stop on the high. You could have been tighter. You could have been over the little consolidation, but I just hate getting shaken out of these, which is what often happens. So that's a what, a 30 something cent stop. If you want to trade just a $100 risk level, you can get 300 shares with a 35-cent stop approximately. Produces a profit of $381. Not bad if you hold it to the target. But I just wanted to show what you can do with incremental entries. And I'm not sure my spreadsheet is right because I just ripped through it. But those 3 entries I just mentioned, the first one was 1877 by 1910. It was a 33-cent risk, 300 shares. You need $5,600 of buying power to do that. Just about any account can handle that. Let's say the exit was at $18. That's where I got out my first half anyway, was at $18. So you exit 150 shares there, 77-cent gain. You realize $115. You still have $115 in unrealized profit. Total profit at the moment was $230 if you took it all. So you got 150 shares left, and then you get that rally back into the VWAP, right? I'll go back and that's this rally right here at 950, right? Off the bottom into a line that I watch like a hawk, and you get a beautiful entry. That's the pullback entry, right? Bunch of bars up and then a reversal bar. Entries right there under the green bar with a stop over the red bar. So suppose you do this. Suppose you take the 1829 by 1868 entry. The least you do, or I do, is I bring my stop down on another 150 shares to over to this 1868. But suppose you take another 300 shares right there in a second trade. You still have about a $5,000, well, you got a little more. I think I miscalculated that. I think you have more like 7 buying power. But now you got 450 shares, some of them from 1877 and the rest at 1829. You've already realized $115 in profit. Now you have 450 shares. You get a 44-cent gain on that. Let's say if you get out at 1785, which is a new low below the 18, but still not at the 1750. This is hypothetical now. I did something like this, but not exactly. And then you could say, well, Rob, you got 300 new shares at a 39-cent stop. Isn't that $120? And yeah, it is in risk, but remember, you got $115 in unrealized gain. So basically, you're capturing your $115 and now you're break even, except you have a 450 shares with a nice target still in front. So you get to the next target, you realize another $132. Well, if you take that exit, and you have a total profit now of $410. And then if you wait and take that third trade, still holding 150 shares of the original 1877, you get that breakdown entry 1780 by 1805. That's a 25-cent stop. So if you want to stick to your $100 risk level, you can only take 400. But the thing is, you've already realized $410 of profit. Why not reinvest some into the trade? You don't have to. At no point, once we got the first target, am I ever taking anything at risk. It's all break even or better at this point. So we can go to 850 shares now and still be $132 of profit, even if that stops. It does take $15,000 of buying power, which again, any account's going to have that if you're good to day trade. And then you get your 1750 target. You got a little more if you wanted to hold. So now you sell, you cover it all. You get another 30-cent gain. You get $255 more of realized gain, plus the 190 from the original 150 shares at 1877. So you end up with basically $692 worth of profit, and you never took any more risk, right? That's the key here. You took $100 of risk. If you took 200, you can double all these numbers. And this is to me a way to trade with very little risk and use your unrealized profits to produce more gains and take the plays. Sometimes this number can get astronomical. I mean, if you really follow it. The only downside is, you know, you had $410. Now you're willing to go back to 132 if it doesn't work to make 7. So it's all managing risk and what you're willing to do. But I just wanted to show that it is how I like to do it. I mean, I don't do it that aggressively, but I like to get out and then I like to re-enter and like to use some of the profits to get a little more size than I might have originally. Anyway, that's entries.
Thanks, Rob. Good lesson.
Any questions?
Excellent, excellent. Thank you so much, Rob Shapiro, for a sensational lecture on entries and candlesticks and charting. It was great.
All right, good deal. Thanks all.
Thank you.
Hopefully see you next month.
Does anyone
How
have
much-
any questions?
How much did it cost you to short? You were shorting that the last example. Like how much did it cost to borrow the shares?
Well, it doesn't cost anything if it's intraday. There's no borrow fees. I mean, if you keep it overnight, you might have to pay fees, but generally intraday, there's no charge for short shares. They have to be available, you need a margin account and all of that, but shouldn't be a charge. I trade totally free these days. If they're charging you for intraday shorts, I would ask why. Because the money's back the same day.
Got it.
Most brokers won't do that.
That here, when you set up your targets, are you looking for, like, are you just looking to gain a few pennies, or are you looking at a percentage of what you're investing for the day, or?
I'm looking for prior supply and demand. Like here, I put the UAA chart back up from Friday.
Mhm.
This is a daily chart. So we gap open under green bars. That to me, that's bearish. That's a strategy though.
Okay,
But the rest of it is, see the prior low at 1750,
yeah.
like 2 weeks before? That's the target.
Ah,
The prior low at 1750. So that's how I know how much room I've got to work with here.
okay,
That's the big target. That's the daily target. And I expect to get that today. It doesn't always happen, but so that's how I do it. I always use the higher time frame for the target.
all right.
Now, if we're at all-time lows or all-time highs, that doesn't work. But then I just try to hold on and trail stop. I might use dollars, like whole numbers, like $50, $40, 30, whatever it is.
Okay,
But I'll also establish trail stops that lock me in on profit, and sometimes just let them go if they're at all-time lows or highs.
all right.
Otherwise, it's always supply and demand for me.
Anybody else have a question? I think we're good. Thank
All
you
right.
again, Rob. That was
What
great.
platform do you use what platform do you use the most? What brokers do you use to trade?
I use TradeStation. They're okay if if you don't need support. They're bad if you call them up, but the platform's pretty good. And they don't charge you to trade. So, all right. Okay, good.
Great job.
Okay.
Thank you.
Thanks so much.